congratulations that you are one of the very few people that who have been able to show that kind of dedication to be able to do a course where you have to dedicate months of your weekends to a course like this one. So I'm sure each one of you is going to be a bright star in any of the industries that you guys going to join. So I will try and run you through a bit of the history itself of Aviva. I don't know how many of you know, we are a British company. We are more than 320 years old. So practically the origin of insurance happened with companies like Aviva, UK based, of course. That's where insurance was born. And very funnily, the company was actually first into fire insurance. Fire trucks to put away fire, which used to happen when coal was used primarily to heat the houses in London. And that's where they moved into insurance going forward, which was the backward integration. And then, of course, it's been a great journey across the world. Aviva is one of the very well-known companies. We have asset management, we have pension, we have life insurance, we have general insurance companies across the world. And in India, we came in 2002 to set up our business. Just give me 1 second. This one is ठीक है, छोड़ दो, फोन से कर रहे हैं. Okay, just let me know if you all can hear me.
Yes, sir.
Okay, so let's do it from my mobile phone then. So as I said, the insurance was a backward integration for a company like Aviva. Similarly, I don't know whether you guys have heard about Lloyd's. Anyone has heard about Lloyd's? Practically the first company that ever did insurance. Anyone? So Lloyd's again was actually a coffee shop, and inside the coffee shop, people used to have. The coffee shops were actually trade hubs. There were people from every walk who would come in, and they would try to make sure that similar communities were going to the cafe, which provided information for them. So Lloyd's used to provide a lot of information to mariners, people who were into shipping, and that's how they started publishing a bulletin, which ultimately became so good that they had information about all the ships which were leaving UK for various parts of the world. And eventually, they also ended up setting up insurance as a as a business, and they were practically the first ever insurance business per se that was set up, commercial insurance business that was set up anywhere in the world. Now I will try and project a slide of our history of Aviva. Let's see if I can do that. And while I try to do that, I will try to take you all through phases of insurance actually. So when insurance started, it was for very, very rich merchants. I mean, the ones who were ship owners, the ones who were into trading were of course rich risk takers, and so on and so forth. And eventually a science was born. On the science that was born was called actuarial sciences. Now, actuarial sciences allowed you to assess risk, and it started from the conventional, trading and shipping, and goods that were loaded onto the ships being insured, to becoming more and more sophisticated. So much so that it could even do fire insurance, which was what Aviva got into as the first business. So where you would look at a house and look at what all was the way the house was built and what's the probability for it to catch fire, given that almost every house was using similar heating arrangement of burning coal to keep the house hot. And slowly that science developed. It was fairly mathematical. They would look at various variables and look at probability of an event to occur. And the science then was called actuarial science. And as you know, that's become a very large profession in itself. You have actuaries now across insurance companies. You have actuaries in the banks and other financial institutions, consulting institutions, and it's very much one of the most rewarding careers that somebody can get into. And of course, requires a tremendous amount of skills for anyone to even qualify the papers and become a fellow. Once you qualify all the papers, you're called a fellow of a member of Actuarial Institute of India and similar associations across the world. So these are all, the advent of the science allowed insurance to become smaller and smaller. From houses, we move to human beings. From human beings, we move to diseases. So you can see that how the science itself gave birth to life insurance, health insurance, and very much whatever touches the lives of ordinary citizens. So I will pause here if anyone has any questions before I again attempt to get into my laptop, because the charger has started working, and I'll show you a few slides that we have. So we'll anyways pause here for any questions that anyone may have on origins of insurance.
So ideally, we leave the question answer round towards the end of the session. And you may see that the chat box is interactive.
Can you repeat that again, please?
So I was just saying that we generally keep our question answers towards the end of the session, so that everyone can bombard you with a lot of questions. And what we do during the session is to avoid cross conversations or any glitches. We keep our chat box active. So students put in their questions on the chat box so that you could quickly go through them and answer.
Oh, okay.
Yes, sir.
All right. So Indian insurance industry very much started in pre-independence, of course, but 1956 was when actually LIC was born, and then eventually nationalization of various private players happened. So before that, there were many insurance companies, including Aviva, which used to operate. So typically, foreign insurance companies used to operate before independence in India, and how do I project my PPT onto the Zoom screen?
So you'll have to share screen.
Just the share screen is fine.
Yes.
Okay. Here you go then. Can you all see the presentation?
Absolutely.
Okay, cool. So as you can see, 1696 is when we actually started the company. Insurance of various landmarks was done by the company. We even have insured the London Bridge And of course, our story in India actually began in 1834. As I said, before the nationalization, there were a lot of insurance companies which were operating. Aviva was amongst one of them. And we insured very famous, historical events as well, like the insurance of the Titanic. We also insured the car which you first saw in the James Bond movies. It was an Aston Martin. And of course, in 1969, we had a very new London headquarters, which was one of the finest buildings, architecture marvels that you could see in the early 1970s in UK. And as I said, we joined hand in India with Dabur. So Dabur is one of the largest FMCG, homegrown FMCG companies, and Aviva being one of the largest insurance companies, we formed Aviva India, which is what I represent today. And we have got many firsts. Many firsts include us being pioneers in bank assurance. We also had Sachin Tendulkar as one of our brand ambassadors, which allowed us to create excellent brand recall, especially among parents and parents of young kids. And in 2011, we made a world record. We have, we sponsored a wall of books, and that was like the largest number of books that was ever created as a wall. It was part of our CSR initiative. And of course, in 2022, just before a few weeks back, we announced that we have taken 74% stake in the company, which is the highest possible stake that any insurance company is allowed to take in India as far as the regulations go. Some of the famous personalities, I mean, Queen Victoria, Sir Isaac Newton, Agatha Christie, John Lennon. So very much through our history, you can see that very, very famous people have actually kind of taken insurance from Aviva as a company. And across the world, of course, John F. Kennedy, some of them you would remember, even John Lennon, our lives, bright lives, which were, which didn't go to their logical, natural, end. And of course, that would give you a sense of how, how popular we are across the world, or we were through our history. And moving on, I would give you a bit about what's happened in the insurance industry. Insurance industry in India, of course, is very, very, exciting. There are 23 private players in life insurance and one public player, which is LIC. Life Insurance Corporation of India is actually one of the most admired financial institutions anywhere in the world, because despite being privatized, it is one of the very few public sector enterprises which continues to hold more than 70% of the market share. And it is unprecedented anywhere in the world. So we should all be proud of how strong our financial systems and financial institutions are. Though, we compete with LIC, but we look at them as with reverence and with great respect. And at the same time, there are a few public sector specialized insurance players like Export Credit Guarantee Insurance Company of India, as well as agricultural insurance company. Similarly, there are 27 general insurance players, and now a couple of about 7 to 8 years back, standalone health insurance players were also allowed. So there are 7 standalone health insurance players whose business is to only create policies for health insurance in India. As I said, all life insurance companies were nationalized in 1956. Then 1993 to 99 was actually a Malhotra committee was formed where a lot of recommendations were given to privatize, the insurance industry in India to develop it further. And then, of course, IRDAI, Insurance Regulatory Development Authority of India, was born. And in 2000, very much the liberalization happened and quite a few companies got licenses. Aviva, of course, got our license in 2002. That's when we actually got a license a little earlier, but we started our operations in 2002. And in 2000 to 2014, Indian insurance industry was one of the fastest growing insurance industries anywhere in the world. despite what was happening in external shocks, external circumstances. You must all be remembering what happened in 2009 with the Lehman crisis, when the entire world was was reeling under the impact. But still, overall, from 2000 to 2014 was a high growth phase. And in 2015, government itself also started introducing certain schemes to be able to protect the vulnerable people across the society, which means that they came up with Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Yojana, and they also came up with the Atal Pension Yojana, which allows for very, very small premium to be paid for great benefits that can be taken by really the people who would be uh, almost in the lowest part of the society or in the lower middle class, who were earlier not able to afford taking insurance. 2017, of course, insurance companies was the first time that life insurance companies got listed. So ICICI Prudential Life and State Bank, SBI Life and HDFC Life were three companies which listed themselves in the stock markets, and that allowed for them to raise almost $6 billion from public during their IPOs. And they all have been running their companies fairly successfully, and there will be many more companies which will look to go public in that fashion over a period of time. India overall still continues to be low in terms of insurance penetration as a percentage of premium. And I'm happy to tell you that in recent meetings with the regulator, a lot of attention has been given to how the penetration can be increased. During the pandemic, we all saw how vulnerable our overall society is. And it means that while people might want to take insurance, they might not want to take insurance. But ultimately, insurance is the only product that allows for financial stability in the event of a crisis. And the crisis was kind of something that all of us saw when COVID hit us, regardless of where you were staying throughout the world. So we are seeing steps being taken by the regulator to deregularize the way the product approvals are being done, to allow for more and more distribution to come in, and also engage with state governments to see what all can be done to increase penetration. Because ultimately, penetration of insurance increasing would mean that our normal citizens could be well protected, and once the citizens are well protected, it also fuels their ability to genuinely start taking risk as far as their careers, their professions, their businesses are concerned, and so on and so forth. So it's got lots of positive linkages. And of course, all the premium that is collected by life insurance companies or general insurance companies, ultimately, majority of that goes back to government schemes and gets invested in government securities, so that long-term sustainable infrastructure projects can be undertaken by the government. So overall, a nation building activity is also aided by development of life insurance and penetration of life insurance on the other side. So that's about India, or the Indian life insurance. Of course, it can be a full detailed presentation. I'm just giving you very, very high level data here. Then, of course, what's happened new? I think many of you would be interested that what's happening in India actually is unprecedented. You have to be able to go outside of India to know that how good is our country in terms of overall the way things are moving. And we continue to show resilience, not only in the 2009 crisis. We have been showing resilience even right now when the entire world is reeling with the impact of Ukraine and Russia going to war, and prices of oil going very high, and energy prices going up, etc. But we still continue to show resilience as an economy. And what has happened over a period of time is digitization of the economy is taken a completely different shape. Now, things may have gone right, things may have gone wrong. Those are very fairly political questions. We will not dwell on it. But overall, the direction of digitization in India has been accelerated in the past 10 odd years. And we have started seeing some kind of results coming out of it. The best results that you can see is if you apply for a passport, or you apply for an Aadhaar card, or if you apply for change in address, opening of a bank account, all of those things are happening at a lightning speed. Nowhere else in the world, even in the most developed countries, are those are those areas being taken care of at that speed by any of the governments. Similarly, very ambitious projects like the Ayushman Bharat, which is basically the National Health Mission, has been rolled, and it means that almost every person below a certain economic level will be given a health insurance cover of about 5 lakh, and similarly they will be given life insurance cover from the government side, which would mean that there will be no one whose families will be devastated purely because of medical expenses going high. Right. So what has happened is all of this is many of this digitization piece that I'm talking about, UPI, most of the Google Pay, most of the Paytms that you are using to make your payments today are actually built on universal payment APIs that the government has formed. It's called UPI, and overall, on top of it, developments have happened which has allowed us to have very good payments infrastructure in the country. So fintech also has gone through, fintech companies have emerged which can just dip into various databases, dip into payment, histories of consumers to be able to offer loans at unprecedented, timelines. Like, there's a company which does loans in less than 60 minutes, which was kind of unheard of. Even a decade back, nobody would have imagined that you can actually end up doing loans, which are such complex areas of financial transactions to be done so fast. So that's overall, this entire development of digitization in the economy has allowed for uh, emergence of new distribution channels for life insurance companies as well. So we have channels like bank insurance. We have now online distribution. Most of the payment platforms also distribute life insurance and health insurance and general insurance products. NBFCs have also widened their reach so that any customers who are borrowing can be covered under a credit life insurance, where in case something happens to the borrower, the loan is squared off and the family is not burdened with the burden of the loan. Similarly, Mahindra Insurance Brokers in 2022 planned for a digitization drive for growth. LIC also collaborated with Paytm. Now, we may call these are as behemoth organizations, but you can see that they are all kind of trying to move fast at the pace at which the economy is moving, and this is itself leading to new distribution models, new models of even creating products in life insurance and health insurance space. And of course, in 2020, WhatsApp announced it has plans to roll out health insurance and micro pension offerings in India, though that has not happened. But that's how even the most modern companies are looking at partnering with the government to increase penetration and create inclusivity. Of course, in the third quarter of FY22, we are rebounding from the impacts of COVID. We have seen 14% growth in individual annual premiums. So the market is doing well. The market share of private sector companies in general in health continues to increase to 47.97 to 48.93 in FY20. But overall, because LIC has so much of customers who are paying their renewals as well, so the overall market size still continues to be almost 70% with LIC, at least in the life insurance space. So you can see right now that new distribution channels, when they emerge, what will they do? It will allow the companies like ourselves to think of how to distribute our products. It will also allow us to create manufacturing of products which allows for distribution, bite-sized, for example. Earlier, when you were to issue an insurance policy, you would have to do paper filling up. Then you have to have branch infrastructure where somebody were to deposit that paper, and you had people scrutinizing and checking all of those papers to be able to issue a policy. So a policy was not issued below a certain amount of premium or sum assured, purely because it was making no commercial sense. To the cost of paper was sometimes more expensive than the cost of the insurance itself, and in the past. But now all of that has changed. I mean, the digital infrastructure is available. You can ping into UADI. You can ask for a OTP verification of the Aadhaar. and you did not even pick up any paper to do your KYC, which is know your customer. And similarly, you can look at databases of account aggregation, look at databases of available with civil and other companies like them to kind of do a financial underwriting. And if electronic medical records are also made available, you can very much, without even putting the customer through any medical tests, you can actually do a medical underwriting to see whether the customer is eligible for the kind of cover that he or she is asking for. So this all is possible only only in India. I must tell you that in Asia, very few other countries have infrastructures like this. Of course, Singapore has very high, very highly digitized infrastructure. Similarly, you can count Hong Kong as very highly developed market, Taiwan, but amongst the developing countries, there will be no one near us. And even in the developed countries, I'll take you to the next slide, which is around what's happening. I mean, what kind of companies are emerging? Now, some of the companies that we have put in here, there is a company called Turtle Mint. Now, Turtle Mint itself is actually a distribution company, right? And Turtle Fin itself is their sister concern, which is into creating software which can be used by other insurers. So you are seeing Insuretech companies like TurtleFin coming in, solving a small portion of the business, and not just doing that, building a business on top of it. So they took a broking license, and now they are one of the largest brokers of life insurance in India, to show that whatever they have developed as part of their software as a service is so powerful that they themselves can build a business on it. Forget the insurance companies, right? So you can see Policy Bazaar, which started as an aggregator, and today has ambitions to do more than any of the manufacturers as far as their premiums are concerned. So they are also again a aggregator. They started by giving a service which was about comparing various rates of different insurance products available, and that service itself has become so powerful that they themselves have taken to distributing products, and they've become one of the largest distributors just by giving very, very transparent services. So new practices are emerging where, earlier in transparency in insurance was being one of the weaknesses that was being pointed out. Here you had a player who was turning this entire thing around and saying, hey, you know what, I will make it a very, very transparent for you to be able to purchase policies. And then I'll also build a business on top of it. ACO is another company which is doing some very disruptive work in the GI space, right from motor insurance to health insurance. So you would have seen some beautiful ads, but more importantly, they're one of the companies which is using technology to create products which are very, very close to what the consumers want. So, for example, a consumer would want his insurance of the car to not charge him or her if the car is not being used. So all of those things that we used to hear as case studies are right now available in India. They are through companies like ACO, Digit, and various new age companies which have come in the GI and the health insurance space. So you would find almost the most sophisticated products operating in India as far as the general insurance and the life insurance and the health insurance piece is concerned. And all of this has happened because many of these companies which provide services or Insuretech services are actually Indian-born companies. So which means the price at which you can onboard this technology is very, very different from the price at which you onboard a technology where somebody is operating in another country. And let me give you, before we move on, a very good example of my time in Myanmar. So we wanted to solve a health insurance, health problem when COVID struck us, that we wanted to look at companies which could detect COVID basis, basis a picture taken on their mobile. And we've actually found a company called Bina. You guys can go and research it. It's a BINAH. It's an Israeli company, which did have the technology in 2019. You could just look into the mobile phone and it will tell you if you had COVID. And unfortunately, the cost of that particular technology was $25, right? $25 screening per screening. And most of the time when we were even selling life insurance products to customers, the total premium was less than $20. So there was no way that you could commercially afford a product like that. Even the product was very good. Similarly, right now also, the next slide I have is around what's happening in, so I'll go to the next slide, but it's more or less an Insuretech, health tech piece that we'll talk about. So right now, the opportunity is also there for life insurance companies to reinvent themselves and say, can we really move from not just creating products which are easy to administer, not only creating products which are easy to deliver or distribute through these digital channels, but can we also start partnering with companies? Okay, so I gave you an example of Bina. If we would have partnered with them, we would have solved a big problem that was being that was being faced by the society in Myanmar, which has very scant medical infrastructure. That how do you really screen people for COVID, right? So those partnerships can become then very, very powerful partnerships, which can really create outcomes which the consumers would really value. It would be not just insurance, but it will be much more than that. So as we speak, we are trying at this point of time to build a digital ecosystem in Aviva in India. And the digital ecosystem would be about not only providing great products to the customers around insuring them for life insurance, around insuring them for critical illness, because critical illness is your cancers, your liver transplants, your heart surgeries, etc. These are very major diseases that customers sometimes face, and they can be really big drains on the financials, not just of the customer themselves, but of the entire family. So critical illness is one core area of focus for us here in Aviva. And at the same time, we also realize that it's not just giving financial protection. The customer who buys a policy from us is actually not looking for only financial protection, but they're actually looking at how to prevent those occurrences from happening. And those occurrences from happening can only be prevented by putting our customers through good regimes, helping them develop healthy habits around physical fitness, around nutrition, around mental well-being, and also giving them digitally mounted periodic screening for most of these diseases, right? So if someone can have good fitness, where they're moving a lot, picking up sports, etc., are eating healthy food and are taking care of their mental well-being by doing yoga, meditation, or even just, having a nice social life, then all of this together with a periodic screening would mean that we would create a completely new version of our customers, which will be their own best versions, and that is very much what is required right now. The countries where their population is well protected, healthy, has good access to education are the ones which progress, and similarly companies like ours who are going to make the customers go beyond taking just a product and helping them to adopt these healthy habits. I'm sure they will be rewarded by the customers in terms of being recommended to other customers, being talked positively, and that's where the new that's where the development is going to happen as we move forward as far as product designs are concerned. So here I would like to now stop. I've had almost a half an hour monologue. So many of you, I don't know whether you were able to get what I said, although I tried to make it very, very simple. I tried to make it in a way that somebody with no insurance or financial services background could understand. But having said all of that, with the best of our intentions, sometimes because we have been in the profession for so long, we assume that everything is understood, whereas sometimes it is not. That's something which we have learned when we deal with our new joinees in our companies. So over to all of you to give me some good questions to answer.
Thank you, sir. It was very insightful. So yeah, we're gonna start with the question round. I have a few questions collated with me, and I'm gonna start with that, and then we will move on to everyone who has a question here.
Yeah. So I think I just saw one question, which is very good question on bank assurance, right? Can I take that from Abhishek?
Yeah, absolutely, sir.
Okay. So let me stop sharing the screen. I can then see all of you. All right. So how does bank assurance help how does bank assurance help the bank in any ways, right? Apparently it helps the insurance company to sell a lot of insurance. But in reality, what happens? What is the what happens to a family who has somebody with cancer? Okay, anyone? I mean, the family usually goes and tries to dip into their savings and look at the best possible treatment. And if anyone in your family would have gone through a cancer treatment, you would realize that there is no end to how expensive the treatment can be. I mean, there will be always something which is, on the borderline very expensive and can be experimented with to save a patient. And uh, and that's why I mentioned critical illness, because critical illnesses can be really big drains. And out of our experience of consumers, we have realized that nobody ever saves for a bad event. Okay, people will save for a good event. So somebody will save, for a higher education, for example, for themselves when they are very young, saying, okay, you know what, I've done my MBA from XLRI. Now, can I do another advanced course by taking a break a couple of years later and go to Harvard, right? So nobody would put any money aside for something which is like, hey, can I start putting some money if 10 years down the line my health doesn't support? Because if somebody passes out from XLRI, usually ends up in very good companies, and sometimes good companies have stressful jobs, right? So higher the salary, better the job, the higher the risk of the person, being under stress, and the higher the chance of them being them being vulnerable to critical illnesses coming early. But nobody would be, I mean, it's not natural for anyone to start saving for something which is which is not an event which is pleasantly planned by you. So people I've seen saving for a world tour. Say, I've seen some of my friends saving for their parents to be sent on a world tour. Some of them are saving for kids to be educated in the US, and so on and so forth. All good, happy events. Okay, but nobody plans for the other piece. So that's how insurance becomes so handy. So imagine if during COVID, millions of outflow, customers had outflow from their bank accounts. If that could have been stemmed by the insurance company paying for it, then it's a great win-win for the bank. Similarly, for the loans, customers who take loans, they are also if you have taken a home loan, and the day you have taken a home loan, actually you start treating it right like your own house. But if the loan usually goes for 10 years or 15 years, if something happens in between, uh, and it happens to the person who's the only bread earner, then imagine what happens to the family. But if the insurance has been taken, or a credit life insurance has been opted for, then all the loan is squared off by the insurance company, and the papers of the house is handed over to the to the customers. So for a bank, imagine going and trying to recover. Of course, you can recover. You can sell the house and recover your loan. But I have been a banker myself. I would never want to be in that position where you go to a family which is in a very vulnerable state and say, hey, what, you can't pay now. We have to sell your house to square off the loan. So these are all very, very strong benefits of bank assurance, which accrues to both bank as well as the insurers. And of course, the customers as well, they gain a lot because the customers value the advice that they get from the bank. Financial advice is not something that you can take from anyone. It is usually taken from someone who seems to be good in financial aspects of giving them a 360-degree view of almost the entire financial services industry. And the bankers are really well positioned in that sense to be able to explain the benefits of insurance policies to the customers. Uh, so long answer to a short question, but yeah, it's a very good question. Thank you for asking that.
Thank you, sir. We will start with the questions actually raised, the hands raised here. So Rajat is first in line. Rajat, if you could shoot your question.
Thanks for the very insightful session. I have two questions in particular and a few follow-ups in general. The schemes like Ayushman Bharat and all started by the government, don't you think that is detrimental to the private insurers?
No, because
Yeah,
because they operate very differently. So the private insurers cannot take care of the entire society. We can only give insurance to people who can afford to take an insurance. And unfortunately, that afford to take insurance also starts from a middle class or a lower middle class level, and it is not there below. So there is no conflict actually. It's very good scheme and it should be done. It allows for that portion of the society to to move upwards without worrying about what happens if someone has a disease. Yeah, and I'll give you an example. We had a housekeeper at my home in Myanmar, and she had a lump in her breast. The family was so scared that we got the operation done, but they never even visited, thinking that somebody will ask them for the money, because the cost of treatment would have been their annual income 3 times over of the entire family. Okay, so just imagine a young 20-year-old girl and 3 times of your family's income. If you have to give, they go down under into loans, right? So it's extremely good. It's non-competing, and at the same time, something that we need to all cherish. That we must all pray that it becomes successful.
Thanks, sir. Other thing I wanted to know is, apart from a very impressive claim settlement ratio, what is the moat enjoyed by LIC? Why they are where they are, and how private insurers like yours intend to compete with them?
So LIC has got presence, right? So we are still all very urban focused, companies. Their claim settlement ratio is good, there no doubt. But the way they simplified insurance, and I was talking to somebody outside of our country that, so when you buy an insurance policy, you would have seen ULIPs and other things. There is so many mis-selling complaints which come through and saying, hey, what did you promise and what did you get? But if you remember, LIC agents used to say, you bought a policy of 10 lakh. Now, 10 lakh used to be the sum assured, right? So usually the policy that they were selling would end up giving a benefit equal to the sum assured plus a little more, right? So they all, the kind of practices they developed, apart from the financial practices, because it's not easy to create such a big, massive organization and be financially so strong, following such robust practices of governance, etc. So that's why they are strong. They have huge distribution. They have brand recall, like, as good as Government of India themselves. So it will take some really different disruption from our side to be able to beat them. Right now, we are also trying to do the same. We are trying to build our own number of agents, but they have 1 million agents, we have 2,000, right? So there's no comparison. Our 2,000 can't beat their 1 million in any case. Right. So with the advent of these digital insurers and, with the digital India coming up, hopefully there is some hope for us to be able to push them back a little. But I just showed to you that they have also partnered with Paytm, etc. So no incumbent. They're very different from other other financial services run by the government.
Thanks, sir. That would be all.
Thank you.
Archana ma'am.
Thank you, sir. Thank you so much for this insightful session, first of all. I just had a very different question. So when it comes to, and I wanted to know your thoughts about it, when it comes to, say, for example, genetic condition, you talked about critical illness like cancer and all that. What about genetic diseases and also orphan drugs and orphan diseases where you have very minuscule population who is suffering, and therefore it becomes very difficult for them to fund, and I'm not sure if the cost of the drugs which are meant for orphan disease is astronomically priced. But then how come then the Western countries are able to have that insurance model, but in India we do not have any such thing? So just your thoughts about it.
Yeah, so I mean, insurance product can be created for anybody, right? Even if you have stage 2 cancer, and we get, like all stage 2 cancer, large number of people, insurance product can be created. Unfortunately, in India, the price at which these products will be created is something that is not supported, right? So in Western countries, as you mentioned, outpatient and all kinds of insurances are prevalent. but the premiums are thousands of times higher than what it is in India. And with the present premium, if customers are not buying it, even if we manufacture a product, we have seen that, it doesn't fly. Right. So at some point, some bit of that work has to be done through social modes. So you have companies like Nudge Foundation, you have companies like Keto, which come up with donation drives to be able to fund some of the conditions. But there is there's no other way. The society has to come together to take care of such vulnerable cases, because commercially it doesn't. It's impossible for anyone to make a product out of it. Similarly, you spoke about genetics. We are talking to a couple of companies which do genetic testing to be able to preempt and tell the customers what are the diseases that you may be vulnerable to. And at the same time, we don't want to keep that data. We don't want to eliminate those customers from being able to take insurance as well, right? Because when we design an insurance product, it is designed to take a certain amount of claims, right? But at the same time, there is a lot of work which needs to be done on the prevention side, not only by us, by many other players, and that's why the push from Aviva is right now to create a wellness ecosystem. So we will be one of the players. So we'll have a genetic testing player present there, which makes these services available. But we won't be able to fund it, neither we'll be able to put it inside our product, because our product pricing is less than their cost of doing the testing itself. That's what it is. Commercially, not really viable. For many products have been created. There have been cancer products which have been created, but we haven't really seen big offtake of those, given the very, very high pricing.
So the only reason is the commercial. It's not commercially viable.
Not commercially viable. Yeah,
That's the only reason.
technically, definitely possible.
But then even the government of India doesn't cover, like in Ayushman Bharat. So I understand for a business organization, it is not commercially viable. But when it comes to the government who is supposed to protect its citizen, even, for example, Ayushman Bharat, they also don't cover such things. So nobody actually covers. And I know some of the, patients who suffer with such conditions, even if they are dying and, even simple hospitalization is denied to them, because the reason for hospitalization, they somehow club it to the genetic condition, and therefore there is a denial.
You're absolutely correct. You're absolutely correct. And in fact, you can just go to any of the government hospitals to really see there will be really deserving patients who will never get admitted. Neither they are covered under any of the scheme. And that's why I said that Ayushman Bharat is just a thought, right? It is just starting right now. And we don't know how successful it is. We don't know whether government will be able to manage the expenses, because sometimes it's not just the expenses, it's also how it is administered, and there are leakages, there are corrupt practices which seep in, like the PDS, right? Public distribution system of distribution of food grains. That never really worked. I mean, because though the thought was very good, it was subsidized, it was supposed to go to the right people and through the ration card, etc. So we'll see how things move. But at the same time, once we do create these kind of ecosystems, etc., we like to participate with the industry lobby as well, to see whether there are certain pockets where the government should be paying attention to. Because right now I hear that some bit of genetic testing, they are making it free for a certain kind of conditions. This was told to me by one of the founders of a gene testing company, but I'm not so sure. I'm not fully aware.
And even organizations like Keto, I mean, recently, I'm not sure, just 2-3 days back, there has been a show cause notice to them for doing things of what they're doing. I mean, and then some people go to high court.
There is always this element of trust, right? So whether they did what they did, was it right, was it wrong? During COVID, they raised millions of dollars. And I've also, when I was outside India, I've given money through Keto. So I was pretty disheartened to read that, whatever it was. But we don't know. I mean, whether it is something that was not in their charter, but it was right thing to do. We don't know that. Because when you are forming an NGO, you have to write so many documents, and it can be a compliance issue as well. And not really, I hope that it is not really integrity issue, which is, if it is a compliance issue, it's still okay. That you thought this is the right thing to do, but you were not supposed to do it is still fine. But it's many companies like this will spring up from founders who really have compassion at their heart. They are building these businesses out of compassion, not purely out of that we will make it commercial, but it has to be commercial so that it can be sustainable. So Ketos of the world will die if they are not commercially successful. So anyways, I think it's the word is still not out. Let's hope that things are fine with the organization.
Thank you. Thank you.
Thank you.
Divyanshu.
You're on mute, Divyanshu.
Yeah, hi, sir. So thank you for taking out the time on Sunday and giving us this wonderful insights. Sir, my question is more related to the market dynamics of this insurance industry, right? So I cover fintech businesses primarily, and I've had the opportunity to meet Mr. Kamesh Goyal, who is the founder of Digit, right? So he has a very interesting argument that with all of these frameworks like account aggregator, open APIs, and different sort of data open architecture is there. So the underwriting is being more efficient, and because of that, they have been able to price the customer instead of pricing the product, right? So this is what is happening. The new age Insuretech businesses are primarily because of better underwriting, they are pricing the customer instead of pricing the product, right? On the other hand, the traditional insurers are also, are coming up with some product innovation like ULIPs or ELSS, and these are, very creative insurance products, right? And the distribution channels are also being, broadened. In case of, let's say, somebody like Digit, so they are also partnered with Amazon and Acco and other platforms. So let's say you are buying a phone from Amazon, or let's say you are buying a laptop from Amazon. So there itself, at the point of consumption, you can buy an insurance as well, right?
Bundled insurance.
Bundled insurance, that's right, sir. But sir, my question is, so I've been watching news recently. So I think IRDAI has recently came up with some targets for insurance companies in terms of how much premiums they can write in next 3 to 5 years, right? So so considering all of that, so how do you see product innovation and the market dynamics changing in next 3 to 5 years? Because relatively we are an insured country, and we need more innovation and more efficient distribution channels to increase the penetration. So yes.
So the time is excellent for insurance industry, because the regulator themselves have come up with a very steep target. It's not just a target, right? So it's a very, very huge number that they want us to move, so that by 2025 we are at a certain penetration level which is equal to most of the developed countries. Okay?
Yes.
So that's the task. Now, whether that task, it will emerge over a period of time. So which means the market, if the regulator is interested, anyways, we are commercial companies, we are interested to grow the company fast. So there is no reason for the industry not to grow. So it will be unprecedented growth in the next 4 or 5 years. Products will get personalized, for sure, but within PII boundaries, like, the data, there is no data, security per se practices in India, right?
Yes.
So you may end up being accused of, cherry picking the good customers, not giving offers to customers, like, the previous discussion we had, that somebody may have some bit of a condition. So are you going to even allow the person to have insurance or not, right?
Yes.
So all of those practices will emerge. There will be partnerships between insurtech companies and insurance companies, not only new age, but even the older ones. Like LIC has insurtech partners which are digitizing their onboarding journey of their agents, which is digitizing the training architecture that they have to be able to create reach. So licensing itself, licensing used to be pen and paper, examinations in certain centers, has gone digital. So you can have very large number of insurance agents.
Agents,
But
right?
uh, at the same time, the customer's problem needs to be solved. Right? You can't just simply say, I've got great distribution, I've got great products, but it really is all about the distributor. Because one of the other practices that we have seen is that it's a distributor-driven industry, right?
Yes, sir.
So you end up creating a product which is not fair to the customer, but but disproportionately rewarding to the distributor. Now that is a practice that needs to be taken care of, and that can only happen if we create new distribution. Because if you go to the conventional banks, they have already got 2-3 partners. They're now authorized to take 9 partners. So the ninth partner obviously won't be given commercials which are better than the first partner, isn't it?
Right,
So
sir. Right, sir.
progressively, the cost of distribution itself will move to a completely different orbit if we were to go only into those same distributors. And we need to still see how life insurers, especially, can create new distribution. Companies like Digitaco, who operate in the GI space, creating a bundled insurance product for your laptop or a mobile phone is easier than
Yeah.
saying that you know what, your bank account, we will give you a critical illness bundled. Will you give us that 500 rupees? They haven't seen too much of success, though it's so important, right? 10 times more
So I
important
think
than
it's
mobile.
yes, sir. So it depends on more on the nature of product, where it is a health insurance or a GI or LI, right?
Yeah,
And
absolutely.
also, so sir, in terms of like you are running a fairly huge company, right? So in terms of distribution channels, so where the maximum of the bandwidth is going, are those the traditional distribution channels? Because traditionally it has been assisted sales, right? Insurance
Yes, so our
or the digital channel.
maximum effort right now is to create a distribution-free institution so that we can choose what product we want to sell. Okay, so
Okay.
we can choose what is right for the customer, what is solving the customer's problem, and then create a new generation of distributors where the percentages might not be huge, right? So we may have a distributor who is earning 2% commission instead of 20% commission, but
Right.
because the product is so customer centric, he ends up making far more with that 2% margin than what he
Yes,
would
sir.
have done in 20%. So we are
20%.
trying to, right now for Aviva, the entire focus is, of course, acquiring banks, because this deregulation has happened. We need to be able to move our business up. But having said that, we are right now building our muscles to be able to go directly to the customers, invest into people who are on our roles, invest into digital marketing, which allows us to go deep into the right set of customers. So, for example, you are a young person, you might not want a child plan, whereas some of the other people on this call, if they have a child, may want a child plan. So, how do you really, differentiate between them and showcase them the right visuals, and then nudge them into talking to us. And those talks can be all virtual. They need not have physical presence, and so on and so forth. So that's the direction they went to. But
Got
this
it, sir.
discussion can be very long, actually.
No, I got it, sir. It has given me a very wide perspective. Thank you, sir. Thank you, sir.
Thank you.
Thank you. Arunji.
Hi, good afternoon, sir. Thank you for your insightful session. I have a question that we're talking about the digital well-being and how your product offerings are going to get connected to wellness, digital wellness.
So we are right now, these are all
Like, is it-
sandbox proposals. Okay, so basically, I came back to India because I'm convinced that critical illness needs to be taken head on, and the entire industry right now is not selling enough of that, including GI and life. And life insurers can give a long duration, like we can give a 20-year CI cover to a customer or 30-year CI cover to a customer. So we are talking to partners like who are specializing in, say, screening of cancer. Some of the partners are specializing in using AI to give a lung health index. Some of them are specializing in just doing a 14-second video which can give a complete health assessment. Some of them are specializing in giving a AI-based nutrition program, and so on and so forth. So all of these together some of the features will get bundled. Some of the features will get become part of our overall platform so that it is offered to a customer or nudged to a customer, right? So it's not just that we would be able to sell everything as part and parcel of our product. Similarly, you saw Dr. Trust. It's a company that I've been following for the last 4 years, makes very, very smart scales. So you can just stand on a weighing machine and it can give you your bone mass index, it can give you your visceral fat, your body water content, and so on and so forth. Usually it used to take about 10,000 rupees for a test like that if you were to go to a hospital. So those are the kind of companies that we want to partner with, and three-way habits we want to promote or nudge our customers into: eating well, better, moving more, and going for periodic checks. Because there is nothing that can stop you. I mean, I am 40 plus. I know for sure that every day, every year after 40, I should be getting screened for cancer, but I haven't done it. I'm telling you, and you can go and talk to some of your parents and people who are in that age group. Even if they have the money, many times people would have not done it. We in our company we give free health checkup to all our employees, and some of them don't turn up for the free health checkup. So we'll try and build that rigor and habit and nudge and push for people to also get tested in a proper diagnostic lab if that is what it requires.
Thank you.
Answers your question?
Thank you.
Yes, Mohanji.
Yeah, it's great to see the fascinating journey of Aviva, sir.
Thank you.
Yeah, I have just two questions. One, I mean, it's not a question rather. We could see, I mean, large number of these disruptions being happening in the distribution side. I mean, selling the product, but I mean, definitely with that, the claim settlement ratios are, going well across the industry, including Aviva. So, do you see any newcomers or new technology disruptors or startups coming in the area where they're trying to help consumers in getting claims settled in the right time, smooth way?
So I think if we have to have intermediaries who are springing up just to get claim settlement, that will be a reverse step, because that means the insurers are not proactive enough. Okay, so I mean, there will be new companies which will come up with very, very good claim assessment which can be done. I mean, like, claims can be possibly passed in seconds rather than in days, what is happening right now. Those will be full-fledged life insurance companies. But as we speak, Mohan, yes, there are a few intermediaries who have sprung up in the last couple of years saying, we will get you your claim. And that is purely because there may be some problem in terms of the applications itself, in terms of the disclosures at the time of application, and so on and so forth. But I don't see that as a major business going forward.
You can see like these distribution agents and all, they are limiting their services up to selling majorly. So they are not.
No, so we will expand that, of course. If that was the question, yes, we will hold every distributor to be responsible for quick and efficient claim settlement. Not just that, even presence during claim settlement. Usually, the customer is not in a great, in a great mental state, right? So we will make sure that it happens. But even today, as we speak, the good agents or the good distributors actually are always present. They take care of it. We will use technology to be able to make sure that it happens not only with the top agent, but it goes all the way below, and possibly even put in some financial reward if somebody has done well in terms of getting the claim settlement done. But of course, those can be all commercial decisions taken by each company on its own.
Second thing, sir, regarding this insurance surety bonds, because I work for NTPC, it's a power sector company, government of company. So instead of bank guarantees, we try to promote insurance surety bonds.
Okay.
In place of for the performance securities and bank guarantees. It is quite nascent in insurance industry. So how do you see like that product?
I am not I'm not very sure, because I'm not from the general insurance side. But at the same time, there is something called as professional indemnity insurance that is given to almost all large corporates and senior executives, including me, would have had a professional indemnity insurance. These are fairly complex insurance products to make, right? And you have large brokers which come in. If their companies are willing to do that, go in that route, of course, the market can be developed. But for that, very standardized practices will have to be taken, have to be brought in. So, for example, there was a fund management reinsurance which was done earlier. I don't know whether you know, there was a highest NAV guarantee product which was created, but that meant that the fund managers had to stick to a certain rule in which they will conduct their entire investments. So, if NTPC could create very transparent rules of business, right, then this kind of products will become more and more prevalent. That's my, overall category wise, that's how these products get created. And it's not just NTPC. If all power companies have a very standard way of functioning, then these kind of performance guarantees can be taken into,
NHA is coming largely in accepting these bonds.
Sorry?
NHAI,
Yeah.
the Highway Authority, they are also promoting these bonds.
Yeah, but they are bonds. They are not insurance products.
Insurance, surety bonds.
Yeah, so they are not insurance products actually. That's a insurance surety bond is a little different.
Different.
Yeah.
Thank you, sir.
Thank you, Mohan.
Abhishek, if you could just.
Yeah, good afternoon, sir. So I've got two questions. One is, what is your take on all the insurance companies coming cumulatively together to create a centralized database for making use of machine learning and artificial intelligence for underwriting a case. For example, certain cases we determine whether we need to underwrite the risk based on the past claim experience, whereas many consumers do not reveal this, especially in the zone of Gujarat. They say that previously they had only fever or something like that.
So all the insurance claims are being collated in an organization called IIB right now, and that data is being shared by IIB is a IID authorized database that has been created, and it is shared now with all GILI health insurance players. So yes, a lot of work is happening in that place. And there's something called as a Bima Sugam platform that the government itself is trying to create through IIDA, where a lot of these, digital underwriting will happen, or AI-based underwriting will happen. And it will not depend only on claims. It will look at account aggregators. It will look at the tax data. It will look at very much the entire data which is there in the purview of the government, including the National Health Mission data, to be able to arrive at decisions quickly. But having said that, these models sometimes take time for you to, it's not simply that you borrow a model and implement it. You have to run it for years first to see how accurate are these. Are you not, so it will take about a couple of years, or maybe 3 to 5 years before it becomes the norm. Right now, it's a rarity, but in 5 years, I believe it will become the norm.
Yes, sir. Also, sir, secondly, as you see, sir, like I'm from the same industry. I work at Cholamandalam General Insurance. I'm a stated over there. So, like you see that there is a huge distribution cost that has been required from the market, especially with the likes of Minpro, Policy Bazaar, or Beat Ginnar also. There's a huge cash drain that they also implement, sir. So,
Yeah.
what is your take? This is like causing a lot of saturation on the insurer side also, sir, in terms of a profitability and a margin.
So insurers have to be able to invest in alternate distribution. We have to take the hard route out. Okay, so when privatization happened in India, almost every life insurer actually ended up investing into agents, which was a lot of hard effort, right? Then there were other set of companies which came up and simply borrowed those agents, and they built their own business on it. But end of the day, how much can you borrow? Somebody has to then create, right? So the insurance companies will have to look beyond some of these conventional institutions which are distributing, to be able to go to the customers in a different way, with possibly platform companies or very large companies which are today not into insurance distribution at all.
Right, sir. And
but
lastly,
there's no correct answer to this, Abhishek. This is a hard problem that every management needs to kind of take into account and drive their strategy forward.
Right, sir. Also, sir, lastly, sir, with this new insurance coming, like companies coming into place, what is the like entry barrier to be like part of these organization in the starting days itself?
There is no entry barrier. I mean, the entire if you were to set up a health insurance company, the total capital, I mean, totally you need only 150 crores as capital, right? So there is really no big entry barrier for for anyone to form a company. Like if you get the right investors, almost anyone can do it.
I mean to say, so like like these companies are just they're about to get a license, so being a part of their organization during the starting days only.
Yeah,
Operation start.
if anyone wants to, I mean, it's a good route to take. If you are considering joining a startup like that, I would encourage you to do that. The journey may be hard. You will not have those settled processes. But if the company does well, the rewards are also very good. I mean, most of the young people who were there in many of my previous organization, they have done phenomenally well for themselves, as the company did very well as well. So I would encourage uh, all of you to, whoever wants to join insurance companies, to also consider joining some of these startups.
Thank you, sir.
Thank you.
Saurav.
Hello, good afternoon, sir. Sir, regarding this penetration of insurance in Indian market, especially, when we talk to people in general, a very common answer that we get that insurance is all about fear, psychosis. They play on your fear. So, if this kind of thinking is prevailing in the society, then how to handle this?
So you can just educate. Okay, you can't force feed anybody, right? You can simply educate. If someone goes to a hospital and all bills are paid by an insurance company, then the neighbor also knows, right? So over a period of time, the resistance to taking insurance has reduced. The number of people who are taking term insurance today versus the number of people who used to take term insurance 10 years back is a very different number. I mean, there are people wanting to take health insurance, term insurance, similarly saving, right? Right now, people, you have to nudge people into saving. But ultimately, if the policies are doing well and they're giving decent returns, and that means that the children's education are getting funded and long-term aspirations are being met, over a period of time, people will start allocating more and more. So, I mean, the awareness levels are increasing. That's all I can say, sir. Because right now there are 29 crore policy holders, right? So those 29 crore is a very, very large critical mass at this point of time. How we treat them, how we deliver on those products, how we manage our claims as an industry will go a long way in making this 29 crore go to say 100 odd crores over the next 5-7 years. But we are seeing good conduct right now. Companies are being are getting well governed. The claim ratios are more or less very good for almost all the companies. The renewal, the practices, the number of complaints that are coming through are reducing progressively. So we are seeing good practices overall in the industry. So all of this will automatically allow us to grow.
Thank you.
But this takes time. I mean, this kind of resistance to taking insurance. Like initially, people thought if you take insurance, bad luck actually, right? You're attracting bad things to happen to you, etc. But all those things are gone. I mean, like a pandemic like COVID has taught that there is nothing called luck. I mean, everybody will get impacted, right? So that some of these events have also allowed for the customers to really realize the importance of insurance. Thank you.
Thank you, sir.
Thank you, Saurabh. Thank you, sir. I think I just want to shoot one last question to you, sir, which is on the lines of HR, wherein we wanted to know what were some of the best, or what are some of the best HR practices that Aviva still follows and has been following for the past years while expanding and growing to where it has today.
So it's a good question. We have very large number of people who spent 17, 18 years with us. So one of the things that we do is we are a fairly employee-centric organization. We are 5-day working, whereas most of the insurance companies are not 5-day working. So there is no difference between you being a corporate staff or you being on the field. Similarly, we keep consumers on the center. We are fair to the employees. The performance KPIs are very, very, fairly well-defined, numerical. So the biases are very, very less comparatively. But having said that, all of this has to be continuously, rigorously implemented, all the principles, right? So the new things that we are doing right now is we are really promoting our employees to also develop healthy habits, as I mentioned to you, because it's not just the customers. We have 1,300 employees in our company. Many of them are in more than 30 years of age. So we are also making sure that we not just give them good work-life balance, but also kind of allow them to develop these practices of healthier eating and picking up some sports, making good friends around, because mental well-being cannot happen without a good social life. So all of this together makes us one of the good employers. I wouldn't say top employer, because we haven't participated in any surveys in the last couple of years, but we are a fairly nice multinational company to be working for. If any of you on the call want to work with Aviva, we'll be more than happy to evaluate.
Thank you so much, sir. I'm passing it over to Saurabh now. Thank you so much.
First of all, a very warm good afternoon to all of us. It gives me immense pleasure to deliver the vote of thanks on behalf of the XOL batch. I would take this opportunity to express my special thanks to our chief guest, Mr. Asit Rath, for accepting our invitation and taking us through this session of Insuretech, Future of Insurance Amid Digital Disruption. Today, we got a very good understanding of the birth and evolution of insurance, the Indian insurance market sector, emerging trends, and the role of digital wellness. Thank you, sir, once again for this inspirational and thought-provoking session. We are very grateful to you. Further, I will thank our Professor Kanak Raj sir and Professor Shanu sir for being our catalyst. Last but not the least, a very big thank to our entire IT team and the entire XOL batch for making this session a grand success. Thank you all.
Thank you, everyone. Wishing you all the best in your